Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media account. Also, please like the video, subscribe to the channel if you haven't done so already. Okay, getting into, let's see. Actually, before I get into it, I finished the week with 15 wins, 4 losses for a win rate of 78.95% for the week. Not the greatest week. A few of the losses I could have avoided. I just, I don't know what it is about Fridays lately. For the longest time, I remember months ago that I used to start every Monday red. And I would start the first trade of every Monday red. And that went on for a while. Then I dialed it back. I changed. I adapted to it. I just didn't trade the first 30 minutes. I didn't trade as much on Mondays. And then Mondays end up being good again. And everything works in cycles. I mean, you just gotta understand where you're struggling, whether it's the time of day, the day of the week, whatever. You need to figure out where you're struggling and try to adjust accordingly. For the last 2 or 3 Fridays, I want to say at least 2 or 3 Fridays, I've taken more losses on a Friday than I've taken the entire week. I don't know why. It's just what it is what it is. So I think that next Friday or this Friday coming up, I just won't trade as much, or I may just take 1 or 2 good trades and just call it a day until I get out of that little trend that I seem to be setting myself into. So this is why it's you just gotta know your weaknesses and play into your strengths. And when you see that you're struggling, make changes and adapt. That's all of part of trading. Trading is going to change all the time. I have adapted so many things over the years, and I think that one thing that's kept me in the game for so long is that my ability to adapt very, very fast. And if you don't know how to make the change or where to make the change, then just take a day or 2 off and just decompress, gather yourself, and just take it from there. So now that I'm done lecturing, Monday the 31st, Trade Ideas room, I said SPY puts under 457. Where is Monday? Right here. Yeah, we get this big run up. Is this Monday? Right here? Yeah. We get this big run up. Yeah, we had this. This was last week. Yeah, Thursday. Yeah, this was Thursday. The dump Thursday, came back up, rebounded a little bit. So I was thinking, okay, we were gonna drop. Plus, we had a head and shoulders right here. We get the left, the head, and the right shoulder, and eventually it did pay off down here. It just took a few days. So I was looking at puts. Let's say 457, which is this low right here. Had a run up. It did break the low right here, but I picked these lows pre-market. So if you manage to play the first 10 minutes, you can play off that. But I readjust what I'm doing after the first 10-minute candle is formed. Monday, like I said, I struggle a little bit on Mondays. Usually what's been happening on at open is this is a prime example right here, because we see it a couple times this week. Strong green candle, breaks higher day, ends up being a fake out. But I mean, if you took calls over higher day, you could have played that, because that is a 40-50 cent move, and that on SPX it's probably a $2 or $3 move. And if you're playing and you're not taking $2 or $3 off SPX, you need to rethink what you're doing, because if you're playing Tesla or you're playing Apple or even Qs, you're not getting the $2 or $3 move. And if you are, the move is going to be massive on the ticker. So if you're not taking a $2 or $3 move on SPX, you need to rethink what you're doing, because this is free money right here, especially if you're paying 10 contracts. You're playing 10 contracts and say it moves $2. You're not taking $2,000. You need to really think what you're doing, because it takes about $4 grand a day to make $1 million a year. and that just say if you, that's $2,000 a day. That's almost 500K a year. I mean, the normal people don't make 500K a year. 90% of the traders fail. I would even say that the number could probably be higher than that with options, because people that do fail at trading, they play commons and they hold until the end of time, and then you don't take a loss until you sell. With options, you're playing against the clock. Theater's against you, and to me, I think that the amount of people that win are successful with options is probably more or less 95 to 98% fail, and only for top 5 to 2% do well on options because of the timing factor. So if you're up 2K and you're not taking it, you gotta do it. You gotta change what you're doing, because that's kind of stupid. But I didn't take it. I sat out. But when I broke lower day, I took puts. I took the 45.85 puts at 720, and they went from 720 to 1260 right there. That ended up being a really, really nice play right there. Then I took puts again at 1127, which is right here. I didn't take calls right here. You know, had a really good play. I wasn't going to chase calls. I mean, I could have taken calls here, but like I always say, it's always easy to look after the fact and see how well the trade did, and see where you could have taken trades. But when you're doing it in real time, you just have to go based on the information. To me, this was a massive dump. I wasn't comfortable grabbing calls. If anything, I think I was probably looking for an FE setup, because you had this nasty candle and blow it up. This is one 10-minute candle from 458. This is almost a $2 drop right there, and it came back up. And usually in the past, when you have these massive red candles like this, there's a 50% retracement. Because I used to play these all the time back months ago, maybe even 6 months ago plus, when we had these massive volatility days, we'd have these candles. When it would go up 50%, I would actually grab puts right here because it'd be more downside. But this is not the case. This market does not do that. So I would have waited for puts under 457, but I didn't do that. So I just sat here, and then I had all these cluster of candles right here. This was a perfect opportunity to grab puts because of this big drop right here. Did not make new high a day. It made a lower high. I didn't take it here, and I waited and waited. But once it broke right here, I took it at what, 1127. So I took it 1127. So yeah, I took it right when it broke below down here. I can kind of see why I would take it down here, because normally I would take it right here, but I think this week and obviously the last couple weeks, because I've gotten it too close to right here where it looks like it's going to drop more, it actually would pop more, and I just was too premature of the drop, and it actually was a fake out. So I think I played it safe, and I grabbed it more or less down here underneath the 457.30 area. I grabbed the 45.85, puts at 670, and they went from 670 to $10 right there. So that ended up being a $3 plus move. Like I said, if you're not taking it, rethink what you're doing. That ended up being a good play. Even if I grabbed it here, that would have been a good play. But, I mean, VWAP is right there. And VWAP usually flushes through VWAP. But lately, it's been like using VWAP as resistance and support. It's been doing what it's used to usually do all the time over several months when SPY would chop underneath VWAP or chop above VWAP, it would like have a massive move through it. It just hasn't been doing that much lately, but this time it did do it. So I think by grabbing it right here at the 457.30 area was a better play, and that ended up working out really well. Then I took calls at 136, which is right here. As you can see, I could have taken puts right underneath this area. I didn't. I just waited. It would have been a good play. Then it got bought up really quickly. Then it tried to make a new lower day. It didn't. It got bought up quickly again. And once it broke broke above this area right here of 456.90, you can see the body of this candle, body of this candle, body of this candle, and this was an inside candle. So once it got over this area right here, I grabbed calls. VWAP was a little far away, so I was able to get a small play out of that. I got the 45.80 calls at 610, and they went just from 610 to 730. So I got a dollar plus move out of that. VWAP is right there. I take it quickly, especially because VWAP is right there. You never know. Then I took calls at let's see, 3 o'clock, 257, which is right here. And I see why I grabbed it here. It dropped down, made a higher low, was holding the 200 EMA, which is the purple line. Came back up the VWAP really quickly. So I grabbed the 45.80 calls at 550, and it dropped, and I stopped out, and it raged, and it went green. Wow, that was a real pisser. So yeah, a very, very dirty end of the day move. I was not expecting that. I was expecting to stay in the range, because to me it looked like a range day. One of the things that you get to think about is that whenever SPY has a big day, it likes to have a range day short the next day after, like a consolidation day. So I thought, okay, because it did not make a lower, it made a higher low right here, I thought for sure it was going to stay within the range and not break lower day. And plus you have an inverted head and shoulders. You get the left, the head, and the right shoulder. To me, the setup was there. It was going to stay within the range, I thought, at least. And well, obviously it did got bought up really quickly once it broke lower day, but I thought that was going to be a big move. I would have taken that play again because the setup was there, and I would have taken it. So that's not a loss that I could have avoided. I think I would have taken that either way. That's just the way it is, and this is an arrow range day right here. So let's see. Yeah, end of the day plays have been getting me. That last one, like I said, I would have taken again, but on Tuesday I took a end of day loss. Tuesday pre-market SPY puts under 455, which is rate 455. I think what did I pick 455 for? I think it just went down to the next. Let's see. Oh yeah, I see the low right here. I went based off this low, that lower day. So yeah, that's why I took 455. So, and another thing, I've been adding the I don't have it on this chart, but I've been adding the prior day high and day low on my charts because they've been so important lately. Well, I always know what they are usually, but I've been actually putting the study on to make it easier for me to know, because sometimes I just space out. But anyways, first play of the day. Let's see, 455. It didn't even break yet. First candle was green. Second candle was red. Next one was green. I wasn't going to take calls right there. I mean, I thought about it. It was a fake out, and it was. So I took puts at 1013, which was right here. Once it broke below, I wouldn't have taken it there. I think I actually took it right here at lower day, or maybe even underneath the body of this candle, which is 456.25-ish. This is where I grabbed the 45.75 puts at 750, and they went from 750 to 1180. Again, another $4 plus move. I mean, you're taking 10 contracts. That's a $4,000 move for the day. Also, don't make what do you want to call it? Dollar daily set goals. I know I say that, if you make 1,000 a day or 4K a day, you'll do really well. Don't sit there and say, I have to make this, because if you do, I've seen so many times, me included, in the past, where if you say, I got to make $1,000 a day, and you make 950, and you try to squeeze in another play to make that $50 or whatever, and you end up taking a loss, and you do more harm than good. So don't do that. Don't be narrow, tunnel vision about the numbers. Just focus on the plays. The money will follow, because so many people do that. I need to do this, I need to do that. You don't need to do anything. Just focus on the plays. The money will follow eventually. So you just gotta keep that in mind. And also, stop playing so many tickers. So many people are just chasing ticker after ticker after ticker. The most successful traders only play a couple tickers, and that's it. And the ones that are playing all these tickers, they're probably not even actually playing them. They're probably just saying they're playing them. So, anyways, the next trade I took puts at 12.24, which is right here. I get why I took it here. Right underneath the body of these candles, 224, 1224. So it was right under. I probably took it more or less, probably right here. I probably took it right underneath this 45.95 area because of the descending wedge. It does look like a bear flag, descending triangle right there. Depending on how you look at it, I mean, you get that, and you get, or you can see, you can say it goes off the low of that, and it's flatlining right here, which is what I did. And you can see the body of this candle right here, and the low on these candles. So that was a good area to take, the 45, the 455.95 area. That's where I took it. The 45.70 puts at 550, and they went from 550 to 850. So they got another $3 plus move. I mean, to make 4K a day is very, very easy. But right there, nice little play. Then I took calls, end of the day, 351. I took it right here. And I see why I took it. Opened up here, and it bounced off VWAP, and it looked like it was going to break high a day right here. Then it just got slapped. But I played the 45.80 calls at 250, and they went to zero. So I really thought we were going to get a push. Because whenever SPY is near high a day, at the end of the day, they usually end up pushing it. But in this case, it didn't. The end of the day plays have been so garbage lately. You haven't seen too many moves like this. And when you get a move like this, I feel like it gets everybody like excited that all the end of the day moves. If you played when Trump was president, we had all these end of the day dramas. We had some massive moves the last 10 minutes of every day. And the last few months, we haven't. We've only had maybe one a week. And picking which one is going to be moving is next to impossible. So my voice is starting to crack. But yeah, it's next to impossible. But I was thinking, okay, high day, closing near a high day, we were going to get a push, but we didn't. So I probably could have avoided that loss. I probably could have just not taken it. But it is what it is. Like I said, the last play we had a massive green candle, so I kind of got maybe a little excited that we were going to push, but we didn't. Now on to Wednesday's the 2nd. Trade Ideas Room, I said SPY calls for 454.50, which is right up here. This high started to fade. It didn't. First candle was red. I don't like taking calls over high a day on a red candle. I like, if it's a red candle, the red first 10-minute candle, I will usually take puts at new lower day. If it's a strong green candle, I will take calls over it on ORB, which is open range breakout or breakdown. So the first 10-minute candle does play a factor which way I'm going to go, especially if I'm looking at like the call side. If it's and the first candle was really green, I would have grabbed calls because I was actually looking at the call side. But made a really deep green red candle. Then it tried to make a higher day, and it was a fake out, and it came back down. So once it broke below lower day, I took puts right here at 10:08 at the 452.35 area. I took the 45.35 puts at 8:20, and they went from 8:20 to 12.90. Another $4 play easily. Usually the first play of the day ends up being the best. So that ended up being a really good play. Then you have this little. Did I take the right here? No, I didn't. That looked like a pretty good FU setup right there. I could have taken lower day and got a nice move, but I didn't. Next play was 11.54 right here. I started to try to bounce. I did bounce a little bit, and then it didn't drop down. I took puts underneath 450.55. I took the 45.15 puts at 610, and they went from 610 to 910. Another $3 plus move on that. And then I took puts again at 316, which is right here. Yeah, right here. Tried to bounce, rejected the 20 EMA. 20 EMA is just pushing it down. Once it broke below the bodies of these candles right here, that's where I took it. I took the 45.15 puts at 460. And they went from 460 to 1040 because they were right at the money end of the day. They exploded. They went 100%. So another almost $6 move on that play right there. So that ended up being a really, really good play on that. Yeah, that ended up being a pretty good day. Now on to Thursday. Traded room. I had 4 wins this day. Let's see. SPY puts on a 448. You had this move right here, and it moved up. So I used this low right here. On the pre-market, I always use the nearest 50 cents or a whole round number to make it easier to remember for the opening play. But when the day goes on and you have like certain areas, I do use exact numbers because it makes it easy to grab the play at a certain point. So I did take calls at let's see, over higher day at 952, which is right here. First 10-minute candle was green. It did break below the 448. If you played it, you would have got a little bit of a move, not much. The next candle, it did not break lower day. And like I said, I usually kind of avoid the second 10-minute candle sometimes because it just seems like a fake out, and it was. I didn't even get to the break it, so it wasn't even technically a fake out, but it started to drop and it came quickly back up to higher day. So when it broke over higher day, I grabbed calls. I grabbed the 4,500 calls at 880, and then went from 880 to $12. So that ended up being a good play. Then I took puts at 1022, which is right here. And I would have taken it underneath the body of this candle right here, not the wick, because we had this move already. I don't want to take it at the body of the wick of the candle because we've already had a pretty good move from 447.50 to, yeah, we had a $2 plus move, almost a $2 move, and I don't want to take puts after a $2 move. To me, I mean, I could have taken it right here, but to me, I really liked it down here, especially being this early in the day where the fake outs are like crazy. Excuse me. That under 448 is where I grabbed it. So I grabbed the 44.90, puts at $8, and then went from $8 to $11.40. Another $3 plus play move right there. So that worked out really well. And then I switched to calls at 11 right here. Because it dropped, made a new lower day, and quickly got bought back up, and you got the bodies of these candles right here. I liked it when it went over that because it fleshed out stops. This is something that's notorious the market makers like to do. They like to take out stops before a real run, and you usually see it with these kind of moves right here, where they will people jumping in puts at open, and they flush out the puts by popping it. Then they come back. People jump into calls. Then they flush out the calls right here, and then they rip it. So if anyone grabbed calls right here, their stop would be lower day. And what do? They flush out lower day, take out the stops, and then they rip it. This is notorious action right here. So usually anytime you see something like this kind of a setup, it's usually going to end up panning out. Now, remember, trading, there's nothing 100% ever. It's all about statistics. To me, statistics has always been my strong suit because I think in statistics, just the way my mind works. I always look at probabilities and statistics at everything in life. I don't know why. It's just my brain is just, I have trouble sleeping because I have insomnia because my brain will not shut the hell up. It's always running and it's always thinking. So to me, so when you see something like this where they try to pop it and it ends up being a fake out and they flush out lower day, that tells me that they're gonna pop it. They're gonna they taking out the call stop so they can pop it. So you see this all the time. So make a mental note of something like this when it happens, because this usually does end up happening. So I did take calls right here, right over at 11 o'clock, right over the 448.60 area. That's a perfect number to grab the bodies of these candles. So I took the 4,500 calls at 650, and then went from 650 to 1160 right there. Another $5 move right there. 10 cons, that's $5 right there. I mean, all it takes is one good play a day. You don't need to trade 20 times a day. You don't need to trade 10 times a day. You don't need to sit and watch 20 tickers a day or watch everything. Just take one or two good plays a day and take the rest of the day off. Go do something, because if you sit and watch the market, you're gonna get FOMO. You're gonna want to trade more, and when you trade more, you're gonna lose. So just take your one or two good trades. Take the rest of the day off. Stop trying to chase everything. Stop trying to trade everything. Me, I love trading, so I mean I like doing this. So I keep staying here. But if I start taking losses, I start making bad decisions, I know when to back off, and that's the whole part of trading. Know your weakness. Know when to call it a day. Know when not to do something. So that ended up being a good play. Then they took calls again at 354. I didn't take any of this. I probably could have, but I didn't. I didn't take any of this. I could have taken this. I didn't take that. I know I missed a couple moves here and there, but I know right here I could have taken it. But these are the kind of things that trap you, because you get this right here. Because if you got underneath the body of this candle, you would have gotten got puts right here, and you would have got stopped out because it ripped. That's why I've been kind of focusing on like this low right here. Like I wouldn't have grabbed it right here because of this massive move, because SPY, when it gets going in a direction, sometimes it either goes straight up with no pullbacks, or it has like these little bull flags right here, and they drop just enough to get you in, then they rip more. So I've been kind of like hesitant about grabbing close to the higher day or the consolidation level near higher day. So trying to avoid those. Would have worked out here, but like I said, it's easy to look at things after the fact and it isn't real time. So this was the area to look at, and I didn't. I should have taken it right here, and I missed it. I probably didn't take it because VWAP was right here, because I think in the challenge account, I took some plays that looked like this, and they went to VWAP and ripped the other way, and I kind of have been avoiding it. So I think I might have actually taken this in the challenge account. I don't know. One of the good plays I had most of the week. Challenge account, it's been kind of very frustrating, but I don't cover the challenge account in the recaps, because if I did, it'd be another video and I'd be recording, doing videos for hours. I don't want to spend hours doing videos. I hate being at the computer. Once the market opens and closes, I'm not even at the computer. I hate it. So now I know I'm ranting and talking a lot in this video, but it is what it is. So the last play of the day, I took calls at 354 right here. 354 right here. Right there, right when it broke over this area, right over the 449.25. I grabbed the 45.05 calls at $1.60, and then went to $1.60 to 350. So that ended up being a good play. Of course, it ripped afterwards. That was because of Amazon earnings, but it is what it is. And then Friday, this day that my Achilles heel for some reason. SPY calls, traded his room SPY calls over 451.50, which is right here, this high. I had a drop right here, then you had news drop, and it started to rage. So I was like, okay, over this high right here will be good. It did break that high. So if you took calls of the opening candle, it worked out. Me, I don't like touching the first 10-minute candle. You can do what you want. So my voice cracked big time. You can do what you want, but I'm not doing it. To me, when I used to trade the first 10-minute candles, it's just too much volatility, too much craziness for me. So I try to stay away from it. Some people do get daring and do it. I do not. And so the first trade of the day was a lower day puts at 415, 45.15 puts at 760. I took a rate when it broke below the 450. I don't know if I took it. Let's see. What is lower day right here? Yeah, lower day is down here. Underneath the 450.30 is where I took it. The 45.15 puts at 760. And then went from 760 to 2040. So that ended up being 100% play right there. That was a nice play. Then I took puts at 1140, which was right here. This is what I'm talking about. But I was thinking we were going to stay in the range. We weren't going to break higher day. We were going to stay, if anything, maybe double top. To me, I grabbed it right here underneath the body of these candles. This is where I backfired, made new higher day. Well, tried to make new higher day. I averaged down to 1152, which was right here. No, right here. So I bought here. I averaged down thinking double top. Then it ripped. So I got it at 760, added more 480, making my new average 620, and I dumped it at 320. And of course, we had the massive drop, and that really kind of burned me. But the thing is that the max pain, I talk about it in the room, the max pain this day was 455 or 454. I don't remember the exact number. It was 454 or 455. Either way, the thing is, the point I'm trying to make is when SPY gaps down below max pain and makes a run, it's pretty much sells the pop, because it does not like to usually go in max pain. Max pain's been like the be all end all kind of scenario. So if SPY opens underneath max pain and SPY has a big gap, I mean a big run, but yeah, it doesn't go into max pain, it's going to end up selling the pops. Now if SPY opens above max pain and it drops, it likely is going to get bought. The dip's going to get bought and it's going to run. That's been the theme for the last few weeks, maybe more, maybe a month. So something I've been looking at and thinking about, because it's been actually working almost 95% of the time now. Remember, nothing's ever 100%, and things change, because back open interest used to matter. The market would try to make as many options as worthless as possible. Now it does not go by open interest. I mean, if anything, they've been paying them, so you really can't go by that. So right now, the max pain's been like a guide, where if it's opening below it and it pops, it's probably a good possibility it's going to be a sell the pop, or buy the dip if it's over max pain. So something to make a mental note about. This is what I'm talking about when I say make your adjustments. The market's always changing. Change with it. When you see patterns, not necessarily chart patterns, but like other patterns like that, where certain things seem to happen a lot, that you make these mental notes and start paying attention to them and adjust to them. So just spitting that out there. So I did take that loss, and it ended up dumping. So that kind of pissed me off a little bit. That did not make me very happy. Then I tried grabbing calls right here, right at PDC. No, it wasn't at PDC. No, it was at VWAP. Yeah, it was at VWAP. I took 45.30 calls at VWAP, bounce at VWAP. I did a little bit of a bounce. I got the 45.30 calls at 470, and they went from 470 to 530. Got in and out. Kind of glad I did, because it dumped more. I should have taken puts right there. I was looking at puts after I got in calls, and it didn't really go anywhere. I was like, okay, I'm gonna get puts right here in the challenge, and I didn't, and it went nuts. And I was gonna get calls. I think I grabbed calls on the challenge right here at PDC, but I should have grabbed puts right here, right at PDC, after it bounced a little bit right here and failed. But I think I remember I was looking at a FU setup, and it started to look like it, because you could see it opened here and it started to go up, and it was green for a while. Then towards the end of the 10 minutes of the 10-minute candle, it just dropped, so the candle ended up finishing red. and I was just like, okay, I don't really want to buy puts right here, but I should have, because of the inverted cup and handle. You get the handle here and the cup. I should have taken the puts right there. I didn't see it after it broke PDC and it flushed through. I saw the pattern. I was like, why didn't I see that? That's clear as day. I just don't know what I was thinking at that time. So, sometimes you see things, you get too in the zone, and you miss something. So I think at this point I was too dead set on this being an FU setup, and if this didn't end up being a green candle, I was not taking it, and I just didn't even see the inverted cup and handle, and I should have taken it. So it was clear, and then after it pushed through down here, after this candle formed, I did see it, and I was just like, oh, it's one of those dumb moments where I just should have taken it, but it is what it is. So I took calls at 251, which is right here. No, 251 right here. I'm not quite sure why I took it down here. 447. Was this the low of it? No, yeah, it broke the low below this. Yeah, broke the low of this area over here on the hourly. Plus 447 was a pretty big area on the hourly, and our side was down at 30, I think, or below 30. So I was thinking we were going to get a push. Plus, after a $6 drop with no news, I thought for sure we were going to bounce. So I grabbed puts here, calls here. Well, if I grabbed puts here, it would have been better. But I grabbed calls here. I grabbed a 44.90 calls at 6.90, and it did bounce. And I think I grabbed it right at 447. It did bounce. I did sell some. I sold most of them, but I think I only held like 3 or so, or whatever. And I held them for a massive end of the day bounce, which we never got. So the play ended up finishing slightly red because I had, I think I had 10. And I sold 7. I kept 3, so it didn't really wasn't that big of a big deal going to 0 on the rest of them. I mean, wasn't that big of a loss. It was just a tiny one. So, but anyways, I was thinking we were going to get a massive end of the day push, at least to PDC, get us back up here, retrace the breakdown of this area, but it just didn't do that, and I took a loss right there. So just I don't know, just not a great day on Friday. I don't know why. I'm just not doing well on Fridays, but I'm not going to dwell on it. Next week, or this week's a new week, and hopefully it's a better week, a little more volatile and stuff like that. So that's the recap. I hope this has helped, and thanks for watching.